Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Friday, May 23rd, 2025. Let's take a look at the charts. We're back in reach of the important 359.39 to 355.51 region. Combination, well, there's a few things. The low 350s I'll show here on the weekly chart. 50% upside retracement from that December high to the more recent April low is 351.39, and 351.51 is the former two-year channel top. That actually behaved pretty well in November of last year when we closed above it, set off the rally. We were anticipating 513.90. Didn't happen. When we came falling back, it held for a week before we closed below it, and that resulted in a continued collapse to the April low. So it is still a valid area. And when you combine it with the descending two-thirds speed line that is also trend defining, this is an area of resistance that is significant. Holding below it, and we've been testing it now for over a week, will keep what is now at 265.17 and rising in reach over the next 3 to 5 weeks. Now, what occurred, I don't show it anymore, but if you recall, there was a one-week channel bottom. We closed just below on Wednesday. We even opened below on Thursday and ripped right back above it. And that was a difficult trade if you were short. Having closed higher on the day after that sell signal is not only a stabilizer, but I think it also indicates a continued testing of the low to mid 350s today. And yes, if we close above that 355.51 speed line, we enter a meaningful buy signal that I'm expecting to play out not only into and through June, but into later year. I'll get to that in a moment. The activity that occurred yesterday, that reversal after having closed below the channel bottom, that is oftentimes an indication of pent-up strength, buying pressure. I don't want to front run a buy signal because anything can happen here. But really what I'm saying is I would be even less surprised today or over the next few days if we were to actually close above the 355.51 descending speed line. And under that scenario, if we do close today above 355.51, I expect 383.76 by the end of next week. That is your 3 to 5 day swing trade to the upside. And over the next 3 to 5 weeks or sooner, 427.01, which is the low of the high in December, that all-time high. That was a significant development. It's a key reversal, as you can see, a new all-time high. We came falling back to close clearly below the previous day's low. That was an indication of an overextended market, and the rest is history. And so that'll be an important area. This will be a 3-star resistance, nothing that would contain a monthly high, but certainly a weekly high on the way up. In fact, as I've been saying, if we close above the low to mid 350s, 351.39 to 355.51, I would ultimately anticipate the 513.90 5-year channel top by the end of the year or sooner. And that would be the big picture if we close today above 355.59. So if we do, no good reason to be playing the short side. Over the 3 to 5 day time frame, I would expect 383.76. Over the 3 to 5 week time frame, 427.01, and over the 3 to 5 month time frame, 513.90. It's about as simple as that. But until then, this is the area to sell and stay short from the 265.17 rising channel bottom combination two-thirds speed line, remaining a 3 to 5 week downside objective. In terms of our downside pivot point now into next week, it is very simply Wednesday's settlement. That is the lowest settlement we've had since the high was put out on Tuesday. I do think if we close today below 334.62, it does pivot the market south into next week. 3 to 5 day sell signal down to 298.10. And at 298.10, we can bottom out on a weekly basis, turn higher again, perhaps back into this zone in the 350s. And that's why I think you need 3 to 5 weeks to anticipate clearly 265.17. It gives the 298.10 formation the opportunity to contain weekly selling pressures, which it is fully able to do. Closing below 334.62 is also kind of the go with sell signal. If you've not been selling the market on strength, in the 350s. Closing below 334.62 is your show of weakness, where you can jump on the short side. It's a higher probability trade. 298.10 then likely by the end of next week. Still anticipating 265.17 over the next 3 to 5 weeks. If we were over the next week or two to close below the 298.10 formation, we're just another week, 2 at the most, from reaching 265.17, where by that point in time we could bottom out through July and turn higher again. It would be a settlement below 265.17 in the coming weeks that would set up a test of long-term support on the weekly chart, not shown here, but there at 158.13 to 164.24. But we're a long way from that right now. I don't assume 158.13 at all unless we close below 265.17. Then I think you can make a solid case for it. But until then, this is kind of our two-sided framework through the month of June, and we're much closer to the 350s right now, which means that it is playing the short side unless we close today above 355.51. And once again, 383.76 likely by the end of next week, 427.01 likely by the end of June. And as we continue through the third quarter and into the fourth quarter, 513.90 in reach. Today, Thursday, I always record these a day in advance. We put out a stock pick on Chewy, which is a pet food online retailer. We're on the edge of a significant buy signal in that stock. Last week or two, we put out stock picks on Rubrik, GitLab, Wingstop, Landbridge. We've got another 2 coming out next week. You can see them all for free by going to wickedstocks.com and taking advantage of our 5-day free trial, where you'll also see our daily Triple Q, our daily SPY, our weekly Apple stock analysis, etc., etc. I will be back Sunday afternoon with Monday's Tesla, and you have a fabulous weekend.